A big decision you have to make when you're going through a divorce or separation is what to do with the property that you might have bought with your partner. So in today's video, we're going to walk you through the steps in paying out your partner and taking over a joint mortgage.
Now there's three real ways you can go through a separation. You can transfer your share to your partner and you might get a payout. You can sell the property and you and your partner split what's left over. Or the last option is you can take over the entire home loan. You might even pay out your partner and own the home entirely yourself. Jaden, let's talk about this step, which is how to pay out your partner on the mortgage. What does that look like? What are the steps involved?
Yeah, so the first thing is the bank is going to completely reassess your situation. It doesn't matter if you and your partner have been making your payments perfectly for the last 20 years. Unfortunately, when there's a material change, the bank's going from, two people to one. They're going to reassess. They're going to look at your income, your situation, and the interest rate state to make sure you're eligible and you qualify for a loan.
Bearing in mind when you're looking to pay out your partner, you can increase the loan up to 90% of the property valuation. So do be careful there, as if you are looking to pay out your ex, you got to make sure the bank values the property and you understand what the ratio you're lending against that property is.
So what are the steps in paying out your ex? Well, firstly, get legal advice. All of this has different pitfalls and things you need to consider. There could be stamp duty, there could be capital gains if it's an investment property, so keep that in mind before going down this path. You and your partner need to also agree on a price. It's no good if Nathan wants $10 million and I think the place is worth $500,000. You need to agree on a price and say, yep, we agree on this. You might even want to engage some real estate agents to work out how much the property is worth.
You also want to get a formal commitment on the deal in writing. You don't want to do any handshake deals. Get advice from really a solicitor to help you out here and make sure that everything's in writing. Or if you're talking to your partner, that you have something written down. Even a financial binding agreement can be helpful here.
The next step is get in touch with your mortgage broker. We get involved at this point. We usually do the servicing, look at the capacity, make sure that the person that's taking over that home can afford the repayments in the current environment.
Now let's have a look at some pitfalls associated when you are looking at paying out your ex. The first thing is having trouble on agreeing on what the property value is and what the figures should be. This is a real common one because if you talk to a real estate agent versus getting a bank valuation, they can be two very vastly different valuation outcomes, and that can lead to one party thinking the property is worth more or less than another.
The other one is we see as timeframes. You might have agreed on a price a year ago. It's taking you a whole year to get your tax returns and things finished, and the market moves. So again, that's why you want to have it in writing. You want to have a commitment saying, yep, I agree to transfer it for this amount.
Now, if you are starting proceedings and you're going through that separation, but things haven't been finalized, you do really want to make sure you're still paying the mortgage. Even if the other party's refusing to pay, keep paying that mortgage, because if you have credit blemishes, if you have any bad repayment history on that loan, it will affect your ability to secure finance if you are looking to pay out your ex-partner.
Keep in mind that banks keep a 24-month record of your mortgage and credit card repayments on your credit file. So even if you sold that property, but you fell behind in repayments, the banks will see that, and that can affect you when applying for future mortgages.
And we see this a lot where lawyers give advice to you or your partner to say, stop paying the mortgage repayments so that things speed up. Definitely, probably something you want to be very careful of, because if you do stop repayments, as I said, you can have issues with your credit and therefore applying in the future. If you are having financial hardship, you need to call the bank, have a discussion with them, find out what options they have, such as moving the loan to interest only. Maybe you're ahead in repayments and you can use those extra repayments to really stop the repayments, but don't do anything until you talk to the bank and you make sure that they're not going to put any bad marks on your credit file.
I had a client that I recently tried to help out. She'd been through a divorce recently, just went to a local branch and said, hey, my lawyers advised me to stop making repayments on the loan. Is that okay? And the branch person there, who was a bit of a junior, just said, yeah, sure, go for it. It's going to be fine. I'll put a note here. She did that, stopped paying. The loan basically went to 90 days in default and it showed up in her credit file. Later on, almost like 6 months, a year later, she contacted us. We went to apply for a loan. It was still showing in her credit file because the bank hadn't gone through the proper hardship procedures. So keep that in mind. If you are looking at putting payments on hold, contact the right area in the bank, their hardship team, to see what they can arrange for you.
And I guess the last pitfall of buying out your ex is that you need to be prepared to apply for a home loan. So you got to make sure that you're in steady income, you got steady roll. Obviously, you got equity in the property, your credit's fine. So you got to be ready to apply, because the bank is going to look at your savings accounts, your spendings accounts. They're going to look at your home loan history. They're going to look at a bunch of different things that you might not have been expecting and thinking it was just going to be a walk in the park because you already have the loan. Unfortunately, it is a full application. The bank's looking at everything as if you're applying again, because you're all on your own now. You don't have your partner's income or situation included, so they're reassessing the full application. Now, Jaden, will you need to pay stamp duty again when you pay out your ex-partner?
Now, in most cases, you won't need to pay stamp duty again, but generally you're going to need court orders or a binding financial agreement, something from a solicitor to confirm that this has been done as part of a separation. I have had clients who try to go the other way and said, well, we're pretty amicable. We're happy just to kind of split it 50-50, or you're going to sell it to me for 500,000. We agree on that. We're going to avoid going to the solicitor. And that's where there can be stamp duty events if you don't go through the courts and get the court orders. So keep that in mind. Potentially speak to a solicitor and weigh up the pros and cons. If the stamp duty is only $500-$600, it's probably not going to matter. But if it's tens of thousands, then it's probably going to be worth getting a solicitor involved.
Now, this is another thing. It's certainly wise to get advice from a solicitor here. This is general advice. So especially with the stamp duty, you want to make sure that they go through the proper protocols to get that waived if you're eligible to do so. So definitely seek legal advice. And that same goes to how much or how to calculate what your share of the property is worth. Speaking very generally, so obviously don't take this as advice, anything other than just general information. When you're calculating your partner's share, let's say you purchase a property with you and your partner and the property is now worth 500,000. Let's say you only have 200,000 owing. Well, the way you could potentially calculate the payout would be that you go, okay, well, the property's worth 500, you have a 200,000 loan, there's 300,000 in equity we'd get when we sell the property. So a simple mathematical calculation would mean you have 150,000 owing to you each. Obviously, you can calculate things like your real estate fees if you were to sell it, things like that. If you were to pay it, that's not going to be applicable. That might bring that down, but that's the simplest way to work out the share. Now, once again, you want to get legal advice because in some circumstances, you might be entitled to 60% of the assets or 40% or vice versa. So you want to get that advice, but a very simple way of looking at it is exactly like that.
Now, Nathan, how does it work when you're refinancing a home loan after a divorce? Is it considered a purchase or refinance? What do the banks assess it as?
Effectively, they'll look at this as a refinance. Like we talked about before, they're going to do a full assessment. They're going to look at your income documents. They're going to do an evaluation on the property. They're going to assess everything as if it's the first time you're getting a loan. They're going to ask a bunch of questions. So be prepared for this. They are going to absolutely look into all the details.
And keep in mind, if you've got some sort of a sweetheart arrangement where your partner said, you know what, we're friends, the market value might be 800,000, but I'm going to transfer it 500,000. The bank will do their own independent valuation of the property. They'll do a full valuation, so they won't rely on a desktop, an electronic one. They'll actually physically send someone out to your property to check out and see what it's worth. Like Nathan said before, sometimes a real estate agent's appraisal, they might say, well, we think it's worth $1 million. We can sell it, and that's the way the market's going. The bank's looking in the rearview mirror. They're going to look at sales from the last 3 to 6 months and work out the price. So they can be a bit more conservative there.
Yeah, and unlike a purchase, they look at this as a refinance. So they're not going to look at any of your savings history. They don't really mind about that. They will look at your repayment history. And that's why we stressed it before. The repayment history on the loan, even though it's with your ex-partner, they're going to look at that. So if you stop paying your mortgage for 6 months, they're going to say, actually, we're not going to refinance you because we can see in your credit history, you've had late payments, you've missed mortgage repayments. They're not going to really be confident in giving you a loan to refinance that and your ability to pay the mortgage because you've demonstrated poor character previously with your existing loan. So things to think about. Jaden, is there anything else for separated clients or people going through separations that they need to be aware of?
A very common question I get asked a lot is, can I just take over the loan? If my partner and I have had a mortgage for years and years and years, can I not just take it over? We just remove them from the documents and the paperwork and it's all good. And the answer to that is no, unfortunately. The bank will need to reassess it. They see this as a critical change to the loan contract. So they're saying, well, half of the borrowers on the loan aren't going to exist there. We don't know if you've got the capacity there. So as we said before, it'll go through a full application.
Now, another question we get asked a lot is, do I need a separation agreement? In a lot of circumstances, the bank want that separation agreement so they know what's happening with the assets and so that they know that if they do refinance this property into your name, they're not going to have any issues where the partner comes back in the future, things like stamp duty. They want to make sure, because a lot of times if the property's in both names, they need to understand that there is a separation going down and that the property is being transferred to you.
The other thing they get from a separation agreement is potentially custody of children. If there's other arrangements there that need to occur after separation, because we do see this often where you might have 4 children, there's a couple, you're separating, and one of the partners only gets custody 25% of the time. There are some banks that will take that into consideration when they're assessing you and probably be less harsh on your living expenses, but if there's maintenance, they'll take that out. So keep that in mind. The banks will need this. The other way they can do this if you don't have a separation agreement is something from a solicitor saying, yep, Nathan and Jaden have agreed to sell the property. Here's a transfer of title for this. There is stamp duty paying, so we don't have a separation agreement, and you can get around it that way, but generally it is required.
And the last question we get a lot of is, what if we get a bad bank valuation? The good thing is we have a number of lenders on our panel. So if we get one bank valuing it low or the property low, we can go and get another valuation from another lender. And sometimes that can help. Sometimes if the properties are consistently getting valued low by the banks and there's not enough equity to do the separation, we'll let you know and be very open and transparent. And that's where you might not be able to actually complete the transaction and you might need to sell the property and split the assets. Once again, that's really last resort. We don't see a lot of that. Usually getting another bank to value the property fixes that issue. But once again, it's more case by case. Guys, here at Hunter Galloway, we're mortgage brokers. We deal with people right across Australia. So if you need assistance, reach out with us at huntergalloway.com.au or call us on 1300 088 065 and we'll see you next time.